Hey soldiers, the United States government just did something, just made a move that essentially weaponized the banking system against the rest of the world, weaponized the American banking system. Now, at first blush, you might have a couple of reactions to this. You might say, wow, how short-sighted of them. That's not a good move. That's going to further erode the confidence in the United States of America as an investment destination. But you know what? That might not be the right reaction to this. I think in this case, the FDIC has actually played a little chess, and this move may result in benefiting a certain sector of the economy. This may cause you to look at that sector and say, hey, maybe I need to put some money behind them and ride this wave. Okay, we're going to get into it. Inversely, it may also cause you to look at a segment of that particular industry and say, I want to get my money out of being associated with this side of the industry. We'll get to this in deep detail in a moment. Guys, go ahead. The channel is growing. We're making some fantastic improvements in quality for you. I need you to subscribe, enlist, become a soldier of finance. All you got to do is hit the subscribe button. Let me know you did so in the comments. I will salute you. Also, everyone, I really appreciate this. Guys, you've been doing such a great job. Just go ahead and knock it out. Hit the thumbs up button. This really helps the videos. You wouldn't imagine how helpful this is when you just simply do that one thing, hit that thumbs up. Also, share this video with a friend. Share it with an enemy. So, the FDIC, Federal Deposit Insurance Company, looks like they've weaponized the banking system in such a way that, as I said before, this seems like a chess move, will result in tremendous benefit. Dollar weaponization expands. FDIC's message to foreign depositors is don't trust the U.S. Now, that's the headline, but we'll see in a minute who else you're going to trust, all right? Especially when it comes to these deposits. In March, the FDIC seized nearly $14 billion in foreign deposits at Silicon Valley Bank. Most of the deposits were from Asia. Foreign depositors have been waiting to access their money since that time. The FDIC now affirms, too bad, sorry, poof, the money's gone. At least it's not available to those that once owned it, okay? 2 months after the failure of Silicon Valley Bank, the lender's depositors, the bank's depositors, in the Cayman Islands have been left out in the cold. The California-based bank's American depositors, you remember this, we reported on it, they were protected when the FDIC took control of SVB on March 10th and guaranteed all of their funds, not just their federally insured funds of $250,000 per depositor per institution, okay? They got whatever they had in there, the U.S. government guaranteed they got it all back. And now, since we're learning that they seized money from another part of SVB that had foreign deposits, and now we're figuring out, hey, did the taxpayers pay for this, or did America steal the money and make the U.S. depositors whole with it? SVB's U.S. branches, as well as its loans and deposits, were acquired by First Citizens Bank shares in late March. It has been a vastly different story for customers of SVB's Cayman Islands branch, which was left out of the First Citizens deal and placed under FDIC receivership. The branch in the offshore tax haven was set up to primarily support the bank's activities in Asia, according to SVB. Its depositors, which include multiple Chinese investment firms, haven't been able to access their funds and have been in limbo since SVB's collapse. $14 billion in foreign deposits that they can't access. That's a hefty amount of money. The FDIC's notice surprised customers who had thought an earlier statement from U.S. regulators said that all of SVB's depositors would be made whole. They thought that applied to them, and that's what was said. You even had Janet Yellen come out and allude to the fact that yes, even the Asian or the Chinese, to be specific, even the Chinese depositors would get their money back. Okay, she alluded to that. The FDIC made a systematic risk exception. Government bureaucracy. They can do the word salad thing like nobody's business. Okay, systematic risk exception is what they're calling it, what they did for the SVB depositors here in America. They did that to protect depositors' funds beyond the FDIC limit of $250,000 per bank account. FDIC's stated insurance is for U.S. depositors only, but the exception to make all U.S. depositors whole means foreign depositors bear 100% of the responsibility for the collapse of SVB. Since bondholders rate higher than unsecured depositors, the FDIC had significant losses rated to SVB, Silicon Valley Bank. Foreign depositors may get 0 cents on the dollar. Where have we seen this before? We did the report last week on the fact that the IRS has come into that whole FTX. God, these acronyms. What happened to Acme, plumbers? What happened to the simple names? Anyway, we saw where the IRS came in to the whole FTX situation, and they have levied tens of billions of dollars in fines. And now we're seeing that the amount owed the IRS is taking precedence over the depositors, which are considered unsecured. All right. And there's no FDIC to back up or to insure those FTX depositors. So they are just, out of luck. But now we're seeing with this situation that, they're being considered unsecured as depositors, and therefore the likelihood of them getting anything is slim to none. The clear message by the FDIC is don't bank in the U.S. If you do, it better be at one of the giant too big to fail banks. If you are a foreign depositor at any small or mid-sized bank, the FDIC is affirming that you better get your money out now. Let the foreign deposit run begin. So, do I think this is going to precipitate a bank run? Yes, but I think it's going to be confined to any of the smaller regional or even community banks that foreign investors have their money in. And it's going to migrate to the larger banks, specifically JP Morgan, Goldman Sachs, Bank of America, so on and so forth. And I think that's calculated. I think that the U.S. made this move for the very reason to boost the big banks and to further hobble the small banks, because it is inevitable that over time we will see money flow out of, you're talking $14 billion. Let's say you had $14 billion, okay? And you are a citizen of Malaysia, and you just heard this happen, okay? Now, you weren't in SVB, but you are in a smaller bank over here in America. You got all this money over there tied up, okay? What are you going to do, man? You're not going to want to hear about customer service and that old hometown feel. No, you're going to withdraw that money. And because you want it to stay with an American bank, I'm going to tell you why a lot of, especially Chinese nationals, want that, okay? You're going to move it to the big, quote, too big to fail, okay, banks like JP Morgan. They're going to benefit from this. And the reason why, especially wealthy Chinese nationals like to keep a lot of money offshore is because China could just come in. The United States is getting to be this way too in many respects. But China can just come in and seize all your money. and you can't do a damn thing about it. Okay, ask Jack Ma about that. All right. So in terms of being able to feel safer about the money you have on deposit, you put it with a larger bank but you keep it in the United States. I think that's what's going to happen. So from the standpoint of investment, it may boost the fortunes of the big banks. But I think if we see this migration, it definitely is going to be detrimental for the stocks of the smaller banks. All right. And downstream, it may not bode well at all for their continued operations, depending upon how much exposure they have to foreign deposits. All right. And the United States is still, even with everything that's going on, okay, we tend to be very U.S. centric on this channel because I live here. Okay. I'm a citizen of the United States of America. And we are looking out from our fishbowl and we're saying that all of these issues are occurring inside this country. But when it comes to keeping your money somewhere safe, America's not necessarily the best place, because if you go over to Nomad Capitalist, his channel, he talks ad nauseum about the ability to go where your money is treated best. Now, he's talking about that from the standpoint of Americans, primarily, okay? But if you're a Chinese national, going where your money is treated best, or at least better, can include America, all right? So that is why I believe that money's going to stay here. But this is another form of weaponization of the financial system, in this particular case, the banks. Joseph Wang has a tweet saying that by weaponizing the banking system against enemies outside and within, advanced economies are losing their risk-free status. This may not change the global currency order for now, but could lead to a wild scramble for gold and other tangible assets. The other thing it could do, if I am the premier of another country and I see this going on, I'm going to work hard to try to work with my legislative, officials to create an environment where money is treated very well, so that money can flow into my country and we can become sort of like a Liechtenstein or a Swiss banking system or Cayman Islands type thing. Okay, that's another opportunity. So I know that plenty of heads of state watch this channel. So there's one for you for free. You didn't even have to pay $1 million to get a study started. You heard it here from the Soldiers of Finance channel. All right, so Michael Pettis is over at China Financial Markets, and he was asked a few questions with regard to how we might see things shake out as a result of this. And he was asked, will China now hold more commodities and fewer dollars despite the pro-cyclical nature of it? More euros or yen over dollars, more gold. Pettis responds, given that so much of China's reserves, we're speaking about China here, are now indirect and held by state-owned banks, all the increase since 2017, it's hard to say what the currency composition of China's reserves are. Officially, the US dollar is still by far the biggest component, but it is slowly declining. Now, this definitely will make the government of China take a look and say, okay, all right, so to the extent that we've got our company's money tied up in America, and they just got built for 14 billion, mugged for 14 billion, which could have eventually, some of it could have made its way back here to China. China's not going to be happy about that. And that is going to be another signal to them on that level of, a nation state to continue along its path of diversifying away from the dollar. So Pettis continues, I expect that this will continue as far as the official reserves go. But as you know, the hard part of reducing the US dollar component of your reserves is figuring out what the alternative should be. And with such high and growing reserves, and you include the indirect reserves at the state-owned banks, that is a very difficult question to answer. But think about this. China has been, and we've reported on this, China has been buying gold at a furious pace over the last year. Okay, so we do see some migration from those US dollars. Look, if you got, $1 billion, you got $1 billion to work with. And usually you were buying US treasuries with that. And now, a quarter of that is going to gold. That means, you're not getting as much US treasury purchases. Okay, so that's one way you can look at it. So that's what's going on. I don't believe that the United States intended to, it's a calculated risk. They're saying, you know what? As Pettis said, they can't just drop all their dollars at once and run. Okay? They can't do that. So what we can do is we can help these big banks out, because there's been a push to do that. All right? We want to boost the big banks. And you're hearing, this type of language from Jerome Powell, Janet Yellen. The smaller banks, even Janet Yellen said, look, we're not going to sit here and guarantee that these smaller bank depositors are going to be made whole like we did for SVB. Get their $250K and that's it. Okay. All right. So that's one reason why faith in the American economic system is being eroded because of moves like this, even if they do have a short-term benefit to America in, the near term. Now, I want you to watch this video, because even states here in the United States are losing faith in the dollar. Look at the move Alaska just made that is saying, hey, you know what? Things need to change. We're not, placing all our bets on the US dollar. Watch that video, guys, and I will talk to you soon.